Then I have moved to equity trading, where in equity trading, right, like we need so much of money because here in India we don't have much leverage. Hardly they give leverage 1:3 or 1:5. That was not sufficient. So we had to have huge amount to take at least a small risk of $1,000.
Hi, everyone. Today we have Sai with us, another profitable trader. He recently joined us and already achieved payout and profitability. So I just want everyone to welcome Sai. Can you just give us a few, brief words of your background, how long you've been trading, how'd you get to trading, and what was, what's interests you about the trading, and besides making money, obviously. Just a brief understanding where you're coming from and how did you get to trading.
Hi Stan, so this is Sai. I'm from India. I'm into trading from past 5 years, but I was not at all profitable until I joined FundingTraders.
All right.
And I got the first payout from FundingTraders only. That was the first time I got a payout. So generally I started trading after COVID, which is in 2020. I started with equity trading here in India. There I started learning each and everything, like what is a candlestick. I was very new to the trading. So it took almost 6 to 7 months. I took some courses here. I took some help from the people who were into trading. Then I started slowly with options and futures, and then there I lost the money, and I thought that that is not the correct trading that I have to do. Then I have moved to equity trading, where in equity trading, right, like we need so much of money because here in India we don't have much leverage. Hardly they give leverage 1:3 or 1:5. That was not sufficient. So we had to have huge amount to take at least a small risk of $1,000. So for that $1,000 I have to add very huge amount, which was not possible. Then at a stage I thought that I have to give up trading, and I thought to continue with my job. I have a full-time job. At that point of time, somewhere I saw about this prop firm future. I mean the prop firm industry. I think it is in January 2024. Yeah, in January 2024 I came to know about the prop firm industry, where the prop firms are giving us the capital that we need, and we have some rules in place where if we follow all the rules and make profit, then we get good amount without very less investment, like buying a challenge, and that challenge fee is also refundable.
Yeah.
Then that is the point where I started, because it is not the same like how we trade futures and options and even the equity market. We were not doing good risk management. After learning from these prop firms, the first thing that I learned is the risk management. Now I
Right.
have a sound risk management, and at that point of time when I don't know about risk management, I used to laugh when someone says you should risk only 1% of the capital. But
Right.
after learning the prop firm industry, then I thought it made sense that we
Right.
should take less risk and good trades and all. At that point of time, right, in January 2024, I started learning the ICT tools. Like
Okay.
mostly I do
Hold
ICT
up. Let
trading,
me just
and
interrupt you real quick because
yeah.
you're giving a lot of good stuff, and I want to, because a lot of people they listen, but sometimes they don't hear. So because I've spoke to hundreds and hundreds of traders in the interviews,
Okay.
just want to underline a few things that you've already talked before we continue. For example, a lot of traders started in around COVID 2020. A lot of them actually, you did the reverse. You started equities, options, futures, and then FX. And usually most people started doing crypto stuff, and then they realized how volatile and crazy it can be, and it blew a bunch of accounts. And then they transitioned to FX, and futures is a very niche for US only, usually. Now it's expanding, obviously, so we're in that space as well. But FundingTraders, it's the Forex, FX, and the indices and all that stuff, right? So
Yep.
the interesting part is that you did the reverse, but again, the point of prop industry is for both of us to make money, because we want, the reason why we give you capital, it's a very win-win situation, because if you only have $1,000, like you said, the leverage that you need to convert that, it's very hard to make 100K from $1,000. Even
Yes.
if you're
True.
1.0001% who achieves it by accident, mostly luck, you will still blow it at the end anyway, because then you're going to figure out, okay, I just turned 1,000 into 100. Let me, spin the wheel one more time. And at a certain point, the statistical probability of you failing just increases until you just blow up. So, most people don't even get to those stages. And it's a waste of, I mean, obviously, if you make some percent. You cannot make a living, even if you don't live in, obviously, in the United States or one of those countries. Very hard to make a living off of even $1,000, worth to pay all your expenses. And because sometimes you have losing months, sometimes you have break-even months, right? And then you have to pull that money out to pay for the apartment or your car or your life. And so it's a much better approach to use the $1,000, find a prop firm that you like and use them. You're going to benefit by getting capital that you don't have to risk 20% per trade or 50% of the trade and just hoping is gonna win, right? You can actually do normal risk management, and that's where we come in. We want to have risk management in place because we want to see that it's a skill and not achieved by luck. So a lot of people, they first they buckle, they don't wanna, they criticize, oh, this rule, that rule. Listen, at the end of the day, the rules are there. They're not only to protect us, but to protect you. It's for you to learn how to pros do it on Wall Street and not just shoot from the hip and hope something hits. So it's nice to see that obviously after a long journey, which is, again, every journey we had, some people do it in a year, some people do it in 3 years, 4 years, whatever. But it's the tenacity that counts, and especially if you have a job, that's a very good kind of balance of how to. It might take you a little longer, but you will at least be the probability of you not going crazy and not giving up, because if you have a job, it covers all your basic needs. And this, you can approach this in a much calmer, non-emotional state. Whether if you don't have a job and this is your last $1,000 and you're sitting there like this, eating your fingernails, and obviously you're not going to do very well and not going to go very far. For those people who don't want to be at their job, I understand you don't want to be at your job, but for now, do the hybrid model rather. Works probably ideal because it doesn't put as much pressure if you're without a job completely and you just have to provide for your living through trading. And since you don't have the skill set yet, you're still learning. It's not a good position to be in. So hybrid model kind of relaxes it a little bit, so you can still trade it. You're still gonna get shit kicked out of you by the markets, but at least you're not homeless. So that's that.
So 2024 January was the time I started learning the ICT concepts, the price action and all. It took some time. I have seen so many YouTube videos. I did not took any paid subscription, something like that, but everything I learned from YouTube. So it took some
amazing.
time. Yeah.
It's again, a lot of people buy these stupid courses with a dude on a rented Lambo saying, "Oh, look at me, I'm 17 years old and I made $3 quadrillion. Buy my shit for $3,000 and or even $100. It doesn't matter. It's usually those are nothing. All that information that you're gonna have in that course, unless it's an advanced stuff from somebody who has a track record of being in the trading world for a long while, you shouldn't waste your time on beginner courses, money at all. Yeah. I think on YouTube you have pretty much anything you need to get to profitability. And then if you want to learn advanced stuff, you can obviously go in that specific niche market. But
so I learned all this stuff like the ICT and the price action, everything, and I did not start taking the accounts as soon as I learned it. I have done some backtesting. Like I started with swing trading. I started with swing trading, and that swing trading that I was doing in 4 hours time frame. So because of the spreads and this, what do you say, if we carry forward the trade to the next day,
the fees you have to pay.
The fees that we have to pay, that was huge, because some trades were running about 10 to 12 days. It was giving me the profit, but all the profit was almost eaten by the commissions and all. Then I thought this is not the one that I was looking for, where I manage my job. After my job is done, only I'll sit for trading. I only do New York sessions. So my job ends before New York session open in our Indian time zone. So that was pretty much easy for me. Like I hardly do for only 2 to 3 hours from New York time 9:30 to 11:30, something like that. That is only
Okay.
time I trade, and
Then
I don't see the charts for the rest of the day.
I mean, see, you found your niche, and that's exactly where that's why you need to. That's why it takes usually it takes a few years to become profitable. Why? Well, because you have to experiment. First of all, you have to learn the basics. You have to learn
Yes.
A, B, C, D, E, F, G, how to read, how to put them together, how to make a sentence, how to then read so same thing with trading. You have to learn what's candlestick, what's this, that, all the usual nonsense. That will take a while. Then you have to start experimenting what strategies work for you, which strategies don't work for you, and you won't know in a day. You still have to back test and see if this fits your personality, doesn't fit your personality, fits your schedule, doesn't fit your schedule. And swinging, I actually like to tell people to try swinging first, because if they start dropping onto a very low time frame, and they mostly novice traders, they prefer to trade on a super like 1 minute chart, and they have no business being there when they're complete novice traders, because it's the same as I would give a 15-year-old kid, instead of giving him a little hoopty car that barely drives, right? It still gets you to the point from a point A, and I'll give him a brand new Ferrari, and he's 15. What's going to happen? He's going to, and he never drove a car, or he drove it once or twice. That car is going to be totaled in just a matter of time. So same thing with with trading. The very short term time frame is already when you have established your trading style and your trading abilities on a higher time frame. You just then increase the frequencies of these setups occurring on a shorter time frame, even though they might not be just as good as the setup on the 4 hour. But if you know how to pick them and how to adjust to it, then that's when you should pursue the shorter time frame. And the most interesting aspect about the is that people who start getting paid from trading, becoming professional, meaning they usually don't trade for long hours. They only trade for 2 or 3 hours, and then they fuck off.
Okay.
You're now part of the small percentage of people who do just that. In the beginning, you sit and you stare at charts all day long, because you need, again, learning curve, right? You need to learn everything and dedicate that time. But once you actually discover what works a little bit and you back test it, as many traders, again, they never do it. They don't back test, and they never journal. So back testing is part of journaling. You basically see the trades that you took, what works, what doesn't work, and then you make adjustments, right? And that laziness, the lack of discipline, is what keeps a lot of young traders from not being profitable. Yeah, so it's nice to see that. But once you actually know what you're doing, you have your brain. I always say is like a muscle, right? You're not gonna go to the gym and do 5 billion push-ups, right? You can't. Your muscle will collapse. Same thing with trading. Your brain has only so much energy to make hard decisions, and the more decisions it has to make, the more fatigue it becomes. So when you have to sit in front of a computer for 18-hour days and trade on 1 minute chart, on hour 3, your brain is scrambled eggs. It's a mush.
Like
Right. So
even the 1 minute chart will give us so many emotions.
yeah.
So it changes your mind a lot. I don't do 1 minute trading. I
Okay.
come from a higher time frame, and the entry time frame is a 5 minute. I'll not go below that.
Perfect. And that's actually what I think for day trading, and that's probably my favorite way of trading. I look at 4 hour, and I
Yep.
see what's coming into big areas. From daily 4 hour, then you can use either 1 hour and lower to start pinpointing better entries.
Yep.
So use an hour or all the way down to 5 minutes. I usually don't drop below 5 minutes either. So that gives you enough certainty that thing is happening, and it's not just noise, complete noise, where it's I see people trading 15-second charts now, 10-second charts. Then it becomes more like up down, constant coin flipping nonsense. It's not really trading, it's more of a gambling. Unless, again, you run some kind of algo, you have an algo that you program that can do that, your brain is going to go to sorry, part of my French, dog shit in a matter of very short period of time. So that's do tell us more now. Then so what's your plan for the future? How do you planning on scaling, or now that you're starting seeing good results, how do you see what's your plans, so to speak?
Yeah, like the short term plan is to come to the futures coming out of this in the forex part. I don't know what you call non futures part. So I
Right.
want to be in the futures side. That is short-term goal that I have. And yeah, that is pretty much because I'm profitable. I'm doing some good profits. I have taken a payout from funding traders, and I have one more payout that I need some. I think for the consistency, I need to do some two more trades. So once that is
Hmm.
done, so definitely every
Nice.
15 days I'll be requesting each payout. So for
What's
now,
your
I don't
favorite
have any.
instrument, or what do you like to trade the most, or what's
Yeah, the
and maybe you
most I
can
trade.
mention like one of not only your favorite instrument, but you have some kind of like memories of one of the best trades that worked out nicely or something like that, or are they more like just serious of constant chipping away type of environment with
Yeah, the best trading pair that I have is indices. I trade Nasdaq and S&P. So these are the two only instruments that I trade, and I don't have any memories that this was a best trade and all because my risk to reward is 1:2. I only raise 0.5%, and I remove the profit at 1:2. Whether it is expanding or whether it is going slow. Once I take the trade and stop loss is set, TP is set, I never change it. Whether it goes all. Sometimes
Bro.
what happens is the trades will go almost to the TP and it again comes to break even. So many people remove their trades when it is coming to break even, but I just leave it because the risk was taken before the trade was placed. So I believe in that. So many of the trades they come and hit the stop loss, but some of the trades they come to the break even and again they'll go to the TP.
Yeah.
So
No,
I
that's a
I don't have any memories, but I feel good like if the trade is closed in very less time, something around 10 minutes or five
yeah,
minutes
perfect.
because of the push,
Nice
or
and quick.
sometimes yeah, nice and quick, and sometimes the stop loss will be small based on the strategy that I have. Entry is coming out of a good what do you say the good level where we have very small stop loss. That is the time when the profits are booked is fastly. But most of the trades they almost run 30 minutes. 30 minutes is the minimum time that they run. And when I enter the trade at 10 o'clock New York time, mostly by 11:30 before PM
Bro.
session, I close the trades.
And that's perfect. By the way, futures will do. It doesn't matter because the pricing of CFDs and forex for S&P 500 and Nasdaq, they're derived from the indices anyway. So futures
Yeah.
markets is yeah, it will be absolutely the same, maybe even better because you can see liquidity and stuff like that because it's a centralized exchange. But what's interesting also, what you're saying about people have different risk tolerances and psychology. So, for example, for you, you like short stop losses, as you mentioned. Some people like wide stop losses and anything in between. And that's another testament to that. That there's so many ways of making money. Some people make I prefer actually wide stop losses personally, but I trade on the 4-hour time frames as well because then
Okay.
it's the probability of it hitting is very low. I have a very high success rate, and that's because I need to feed that's my weakness actually. And I needed to overcompensate with via a wider stop loss, but I made it work. And again, it's all about figuring out your pluses, and everybody has their weaknesses, and then assigning. So, for example, if you prefer a short-term stop loss, maybe your risk tolerance is very lower, and that's okay too. Again, that means you're going to be taking hits, but when you make winners, you make winners. And 1 to 2,
Yes.
if you're only right about 50% of the time, obviously you're going to be profitable already. So and you're pretty much done after you have that 2-3 hour trading session. You get your 1 or 2 or 3 trades, and then you just you
Yeah,
enjoy
it is only
going your
one
merry way.
trade. Yeah.
Huh?
I
Only
take
one
only
trade.
one trade for yeah,
Yeah,
only
there
one
you go.
trade.
So that's
And
like another great rule.
yeah.
So you're giving a lot of gems today. I'm just underlining some of them, but we spoke to somebody yesterday, one of the traders, and he basically said the same thing. He doesn't do one trade a day, but he has a certain amount that he can lose per day, and if he
Okay.
loses that amount, he quits. It doesn't matter that because otherwise he had a problem of revenge trading, because it's an ego thing. So they like, oh, I lost
Yeah.
1,000, now I'm gonna make it back. This is gonna work this time. No, no, no. You need to walk the fuck away. You need to calm down, relax. Come tomorrow, the markets are not going to go anywhere. There's going to be another opportunity. If instead of long, it's going to be short or whatever, but it's going to be there. And
Yep.
you need to approach it with a calm mind. And talking about risk percentages again, you risk 0.5%,
Yes.
and people that you mentioned yourself, you would laugh at something like that prior, but people who manage, let's say, $1 million 1% loss, that's 10 grand already. That's not chump change. What about 10 million though, right? Then you just threw out a 100K or even $100,000 account, right? Which is very achievable in the prop space. I think it's one of the most common ones. 50 and 100K are probably the most common ones. Once you why most novice traders, they want to risk 5-10%, and then even if they're trading their own $100,000, they're down 30-40K, and all of a sudden they can't get out of that hole anymore, because then they have to risk even more because they want to make everything up in one big trade, and that's how the blow up happens. So that's why you have to chunk it up. Another jam that you've told us, again, it was a trick question, your best trade. It's not about, you don't have one particular that, once in a while, but usually the 80% of your income is 90% of your income is steady as she goes, just a series of trades. So traders never look at, you should never be in the mindset where it's just one trade and you marry it, or one trade and you marry it, and then you either make it or break it. It's more of a, you have to look, I'm going to take 100 trades in the next 100 days or whatever, and out of those 100 trades, I need to be right about 55% of the time, let's say. And that will allow you not to be hung up when you have 2-3 losers in a row, because you're only down 1.5% by 0.5. That's where you risk 1.5. Because even if you have 3 losers, you can recover from that. But if you risk 5% per trade, now you're down 15%. That's already that becomes substantial, right? So it's very hard to start making up 15% just from 3 trades. Then you're gonna go 10%. You're gonna start risking 10% instead of 5%, and that's how you get in trouble one more time. So but I'm glad you found a niche.
I take 1 trade per day, and it's not that I get the trade each day. Monthly I get only 10 to 12. If you see, per month we have 20 trading days. If it is 20, I get only 10 trades. Only 10 days I trade. Other 10 days I don't get that. I don't force myself to take a trade.
Again, another brilliant sign of a professional, somebody who's been around the block in trading, is I don't trade every day either. I let the setups come to the price, come to my setup, and that's when I execute the trade. Just because today is Monday and it's 9 a.m. New York time doesn't mean I have to start clicking that button like a retard. Just because I have to grind, and I'm all hyped up on Instagram videos about grind and no sleep and all that nonsense. Yeah, you can grind maybe, but not in this business. That's not the grind in this business. The grind is staying away when you have no business being in the market. That's the grind, and it's very hard to stay away. Most people want to gamble, they want to experience that emotional roller coaster, and your job is to kill that gambler within you and avoid the emotional roller coaster. You have to just approach it as cold as a robot. Essentially, you have a setup which they don't exactly repeat 100% of the time in exactly the same manner, but they always rhyme, very similar. And you take it, you don't know the outcome of it, and whether it makes money or loses money. This is why you backtest, and you know that out of 100 trades, you're going to be making money either way. So you just take it when it happens, and don't take it when it doesn't happen. That's all of trading, pretty much. So
so that's pretty much about the trading that I do. And
how are you going to spend your money? What's your plan? Are you going to reward yourself for achieving the first payout?
Yeah, so the first payout, I didn't do anything. It's in my account only. So I'm having a bigger plan. After this, so for that plan, I need to save some money. So for that reason, it's still in my account. So I did not use. Yes.
Man. Well, Sai, thank you so much. You've given a lot of our audience, a lot of good tidbits, and everybody comes from different parts of the world, have their own stories. Everybody has, it's not like, even if there are stories where, you come from the best part of the world with $100 million, you're going to blow it away, So everybody has to go through a period of a struggle in order for them to get the reward, right? So I'm finally, it's nice to see people smile. It's nice to see people get the reward finally, because it's a long journey. It's been a long journey for a lot of us, and it brings joy to my heart and to my soul when I see people finally getting the profitability stage, So thank you one more time for doing this. I hope we're going to do a follow-up interview in 6 months, and you can be telling us about same percentage risk, but on a much larger account.
Yeah, definitely. Thanks for having me.
Thank you. I'll check us out next time on the next interview. We're doing this series, fundingtraders.com, YouTube, fundingfutures.com, and see you in the next one.